All right, let's get to the next company then. PI Industries reported a good set of numbers. We have with us the company's Vice Chairman and MD, Mr. Mayank Singhal, who joins us on the show. Hi, Mr. Singhal. Good morning and thanks a lot for joining in. Well, congrats on a good showing. You're growing while most of the industry has been degrowing in the last couple of years. Now you're guiding for a 15% revenue growth. Could you break it up for us? What is the growth you're factoring in your mainstay CSM business, which has grown quite well? Also, your domestic market, well, it degrew for the past quarter at least, but monsoons have picked up. So split it up for us, this 15% growth that you're talking about between both these two segments.
Yeah, hi, morning. When I look at the situation today, yes, the global agchem market is a bit challenged, but there are green shoots which are coming out indicating the growth specifically in the innovator space where we belong. Clearly, these growths are coming from both the engines, while in the first quarter is usually the placement time and the seasons got delayed. But as you rightly said, for the domestic business, with the rains and I hope with no more climatical disorders, but we see a positive growth coming from the domestic business. And at the same time, the CSM business is also showing us the growth rate. So I would say they're equally balanced between the two engines.
Okay. All right. But, don't you want to up that guidance of around that 15%? Because both the segments are going to fire. CSM has been doing phenomenally well and domestic recovers. Are you being a little bit cautious on that 15% mark? And also margins for the past quarter, was there any kind of one-off in it? And what should the margin band be from here on?
Well, let's be honest, what we've indicated earlier, the margin still stays to that. I think quarter on quarter would be the wrong way to look at it because there are different product mixes, different approaches, and obviously as we are scaling up, the operating leverage is also coming in. So what is the initially indicated margins will continue. On a quarter-to-quarter basis, they could vary depending on the product mix, market mix, yeah?
So 15% growth and 26% margins, is that correct?
Yeah, that's what we would now.
Mayank, we come back to that sort of blockbuster product, very important product, pyroxasulfone. And here, I believe that, and we reported this earlier, Kumai has received favorable rulings over process patent protection in Australia and China, which reduces the chances of competing products. So in a way, good for you. Could you contextualize this? How would you view this? You've always, of course, maintained that even if some of the competition does come through, it doesn't impact you that much. But this at the margin should be viewed as positive?
Well, as I said, this would be wrong for me to comment. It's a Kumai product and Kumai strategy. And obviously you can appreciate that being in the IP space, these are tactful moves and tactical approaches. So it will not be fair for me to comment. But clearly, yes, we are in the back end of the manufacturing space. Product continues to grow. The brand markets for these products are strong. Kumai has been heavily investing to grow business and creating differentiated strategies. So as I see in the mid to long, not much impact for PI.
Okay. You are one of the two suppliers to FMC for fluindapyr. The sales for this fungicide is expected to increase 10 times over the next 5 years. I just want to understand how big is this as an opportunity for you?
Well, I would not get into product-specific discussions here, sorry, because, we are in the contract manufacturing business, and I don't know whether the 10 or 5 where it's coming from because we are tied by confidentiality, being in the space, and I hope you appreciate that. But yes, the new products are there. It is a good product which is performing for them. Obviously, based on that, being a strategic supplier, we will definitely see how that shapes up for us.
But is this a very big opportunity for you in the sense, would this reduce your dependency on pyroxasulfone?
I would not answer that to one product. I think overall, if you see, PI has got a bunch of new products which have been coming into our fold for manufacturing over the last 4 or 5 years. And there are further new products coming into the fold. So obviously, over the next 2 to 3 years, you will see the change of this pie shape in a very different manner. Already in the first quarter, growth has come from new products, which is 20%.
Okay, all right. So talking about how the pie is going to shape up, let's talk about the pharma business. The first quarter was subdued for a whole host of factors. How do you see the pharma business ramp up from here on? It did only 25 crores in the first quarter. So what should you end this year with? And also the newly acquired entity, PHC. You've been bullish on the prospects. The street believes that it's going to grow big time as well. Last year, I think it did close to around $11 million. What is the target year on, say in the next 2 to 3 years at least?
Okay, I think there are two questions there. Looking at the pharma business, clearly, as you know, we have acquired these various assets with various capabilities. Further to that, we've been augmenting and also adding to these assets to grow the technical capabilities and also building the regulatory framework around them. The objective here is again to play a differentiated game. Clearly, the current revenues which are there in the system will continue, but the long-term differentiated approach will be seen in the next couple of years as we continue to build on our capabilities and move into the different direction of the differentiated business offerings that we'll be doing in the pharma assets. So if I was to answer, I would very clearly say that PI is pretty satisfied with what's happened so far, and I'm pretty confident by the end of the year, we will be in a position to be really moving up in our strategy.
Okay. And on the acquired asset, you want to tell us that? PHC?
Yes, PHC I think is still in the process of acquisition. We have actually, there's an interesting asset, there's an interesting biological asset which has distribution setups in the US, Mexico and Brazil and also in Europe. There's a unique platform of peptides which is now, which we do believe is coming into shape with some products which are showing good performance and indicators in some of these markets. We are acquiring this platform of peptides, which I hope we will be able to, over again, a few years of time, develop new products in the biological space and create a differentiator. And further, with these capabilities and reaches, we will be able to add more biological solutions and really answer our purpose of reimagining a healthier planet.
All right, you're avoiding any numbers there, Mayank. But final question before we let you go. As you've mentioned numerous times, there are various assets that you've acquired in the last few years. You're sitting on cash of a couple of thousand crores as well. More acquisitions in the pipeline?
So just to give you, I'm avoiding the numbers, not really, because the numbers are not significant to the bigger picture of PI on one hand.
Okay.
So I'll get that very straight. On the other one, yes, we are sitting with about 4,500 odd crores of free cash in the balance sheet. Clearly, the company has always looked at the right way of investing money, which is a value accretive rather than scale and size. So we're looking for smart moves. And obviously, we continue to evaluate opportunities as we go ahead.
Okay. Mayank, we'll let you go on that note. Thanks a lot for joining in and all the best for the quarters to come. That's PI Industries. Revenue growth of 15% is what they're going to stick to for the full year. And Q1 was very strong for them and hence the stock is up about 2.5%.